It's Friday Coffee with your mortgage man, Eric, and here we go. So today we're going to talk about credit cards and how do they impact the eligibility for you getting pre-approved for a home loan and rebuilding your credit, etc., etc. Credit cards. Last video we talked about installment loans or car loans and how they impact it. Today is credit cards. Let's dive into it. So the 4 hidden topics regarding credit cards. Here we go. Hidden topic number 1 is, yes, you do need credit cards. Is what it is. Well, I don't like credit cards. I don't believe in credit cards. Well, you're not going to ever have a very high credit score. It is what it is. Yeah, you can probably get in the high 6s without credit card and maybe eventually even into the low 7s. But what are the benefits of having high credit scores, right? The higher credit scores you have, the better interest rates you get. No security deposits on things like starting your electricity up at another property and things like that. There are amazing benefits to having high credit scores. So you could be obstinate and say, I'm not getting any credit cards, or you could play the game. Look, you don't have to like the game, because I certainly don't like the game. You just need to know how to play the credit score game. And credit cards is a very important part of that factor. So you do need credit cards. As a matter of fact, you need a minimum of 3. Now, focus on that word. I said minimum. Minimum of 3. So yes, you should have 4, 5, 6, 7, 8. And get good ones. Eventually, you'll start getting better offers in the mail for better credit cards. But you have to start somewhere. Hidden topic number 2 on credit cards is you need them open for a minimum of 6 months to really have a score impact, a credit score impact. Those cards are going to be needed to be opened for a minimum of 6 months, reporting to the bureaus for 6 months. That is when you'll start to see the biggest impact. And if you're monitoring your credit on Credit Karma, usually around that 6-month mark after you opened up a credit card is when you're going to see the larger score increase on your Credit Karma app, if you have one. Number 3, now this is a big thing that people seem to miss the boat on, is low balances. Low balance versus limit ratios. What happens when you max out a credit card? Scores go down. What happens when you pay off a credit card? Scores go up. It is not rocket science, although people come to me, have their credit pulled all the time, and they're near maxed out on their credit cards. And and the scores are impacted, obviously, with that. Now, because of this, credit cards are the most manipulating factor when it comes to improving your credit score, repairing your credit score, or building credit. Credit cards are the most manipulating factor. What I mean by that is, if you have a $1,000 credit card and you got $900 on it, and if you pay it off to 0 balance, your scores are going to go up 20, 30, 40, 50 points, depending on other factors, like in 30 days, that quick. Whereas an installment loan, getting a mortgage, you just don't see that impact. They move in increments of 1, 2, 3 points a month. That just is what it is. So let's get into number 4. Hidden topic number 4 on credit cards is the types of credit cards. There are the things I hear on a weekly or daily basis. Well, I can't get any credit cards, or I can't get the good credit cards. You can get some credit cards. Even with the most poorest credit I've seen out there, or somebody has no credit, 18-year-old, starting fresh out of high school, you can get credit. There are some online. Yes, they come with annual fees. That sucks. I get it. High interest rates. Yes, I get it. That's not a favorable thing to have. But there's also secured credit cards. What is a secured credit card? Secured credit card is you go into your local bank. Wells Fargo has these. Chase has these, I believe. Capital One has these. You give them $300 or $500, and then they give you a card back. It's much like a debit card, but it reports to the bureaus, giving you credit score. So understand that. No matter how damaged your credit is, you can get credit cards. But what happens is people just don't want to do it. They don't want to go through it. You don't want to play the game, but you want the best interest rates in the world. You want to get pre-approved for a home loan, and you haven't done any of the work. So every week I run into this scenario where they want down payment assistance program, and they got a 625 FICO score. That's average. It's not bad. It certainly isn't good. It's kind of floating there in purgatory, if you will. But they want down payment assistance. So we got to get them to 660. And I say, look, it's easy. I can get you there in 6 months. 6 months if you follow the instructions. Well, most of us, they want instant gratification today. If you can't give it to them, screw that. They go and they keep renting. Whereas if you just followed simple instructions, go open 3 credit cards, or maybe they only need to open 2 more credit cards. Keep them open for 6 months. Don't put any balances on them, or if you do, if you want to perfect it, manicure this to perfection, you add a tank of gas on there monthly and pay it off. Tank of gas, pay it off. Tank of gas, pay it off. And you do that monthly. And in 6 months, you'll have the credit score. As long as you don't do anything stupid, go sideways and not pay a bill, something like that, you will have the credit score needed for your down payment assistance program. Simple as that. Very simple instructions. But you can't get people to do it. If I'm honest here, I would say 1 out of 25. 1 out of 25 people that I talk to that could get pre-approved by following a simple solution like that will not follow the instructions. And that's why I'm putting the video together. It can be this simple. Let's recap. The 4 hidden secrets about credit cards. 1 is you need credit cards and you should have a minimum of 3. Emphasis on the word minimum. Minimum 3. Get 4, 5, 6. They don't take much time. And yes, you may have to get crappy ones at the beginning, but once your credit score starts to climb, you'll start getting better ones, better offers in the mail with 8% APR or 0% APR for the first 12 months, etc., etc. Moving on, number 2 is they need to be open for a minimum of 6 months. Number 3 hidden secret is low balances to limit, right? Low balances to versus your limit ratio. It's imperative. And as soon as you start getting over 50%, so $1,000 credit card limit, and you start going over 500, it's going to start deteriorating quite quickly on the score. Underneath 50%, underneath 25%, and then underneath 10%, ideally underneath 10%. Hidden secret number 4 is types of credit cards. Secured credit cards, which is where you give the bank money, they give you a card back, they report to the bureaus, your scores come up, or the high interest rate annual fee credit cards. They are out there. You can do this. I can help you with this. Call 602-757-2171. Free consultation. I'll talk to you about it. With that said, it's Friday Coffee. The Mortgage Man Eric. See you.